Hello and welcome to this week's edition of Murphy's Market Minute with Elliot Omenson and
Nathaniel Vossman.
Bringing the latest craziness distilled down into a few key points for you this week.
Oh, yeah. Only the best.
Only the best. So, I guess the most notable thing that occurred is some sort of ceasefire.
Yep.
Apparently, Israel felt it didn't pertain to what they were doing in Lebanon, but after from the reports that I've seen, nobody knows who. Some people are saying it could have been the U.S. Some other people are saying it could have been Europe. But apparently Netanyahu has agreed to stop bombing the out of Lebanon. What'd they do, 1,100 strikes in an hour?
Something crazy, dude.
Something crazy. So it looks like some stuff subsiding. Yep. Even though there's not really any movement. I haven't seen any real movement through the Strait of Hormuz yet. But what's basically the result of this is pretty positive. The S&P just turned negative for some reason. Not sure why, but year to date, it's now only down 0.39%.
Yeah, it's getting back within striking distance of all-time highs. I know we hit, I think at one point we barely ticked over 7,000 at one point on the S&P.
Yeah.
But after, this whole deal with Iran's been going on, we're back up pretty nicely. I think
absolutely. The last 5 days, we gained 3.5% in the S&P. And like I said, we're only off of the year by less than a half a point. The Nasdaq is still positive for the day, I think.
Yep.
It's down 1.55 for the year. Over the last 5 days, it's up 4.5. And today, it's up just a skosh. 0.26.
And it's actually up. This is from last Monday, not this Monday, but Nasdaq is up over 10%, around 10% from last Monday. That's a pretty hefty bump.
Yeah, and so let's talk about it for a second, right? Because you guys have had us do things like tariffs, for instance, right? That was a pretty mild adjustment. We kind of left it up to everybody. Some people we moved 25% to cash or bonds. Some people 50%. Most people we did nothing with, right?
Yeah.
And it was like what, a 6 to 8 month, whatever.
Yeah.
And then in 2020 was the biggest thing we ever did because that was in February, the beginning of February. I think it was the first or second week of February in 2020, due to COVID. We did move heavily into bonds, and so it's not something we do very often. And so this go around with this skirmish. This war, non-war in Iran, we have not done anything. We've not talked to anybody about doing anything. And the reason why is just because, unlike, I really expected the tariffs to persist longer, which is one of the reasons why we took action then. COVID, there was just so much unknown, and we had access to information from inside China that a lot of people, I think a lot of people had access to it, but we had like inside information as to what was going on in the railways, the shipping ports, the factories, due to relationships that I have. And so we knew that they had been shut down so much, it was going to take a long time to get that back up and going. And so with this conflict, so to speak, in Iran, I didn't really think there was anything really to it. I didn't think it was going to persist long. These kind of actions, I don't really see prolonged war action being taken by this administration.
Yeah.
And so we didn't do anything, and we turned out to be a really good thing because if we had, you could have missed that 10%.
Yeah, that's a quick 10% within 2 weeks. That's not even 2 full calendar weeks. It's 12 days. For a whole index to go up 10% is a lot.
Yeah.
You look at individual company, it's not saying much, but for a whole index to be up 10%, that's pretty big.
Yeah. Yeah, and I want to hit Brent crude. Now, for anybody who does oil and gas with us, we don't go off Brent crude. We go off WTI, West Texas.
Yeah.
But Brent crude is kind of the one everybody talks about. Year to date, it's up 60%. But in the last 5 days, it's down 11.3%.
Yeah.
And now today, it is up 1.4%. So it is kind of,
it's down a good amount because I track mostly at WTI and just last week, I think it was in the hundreds, and now it's hovering around 90.
Yeah, and WTI is at 97. Bitcoin's got up a little bit as well. It's up.
I think everything kind of reacted pretty well to the news overseas.
Like 3.7 for the month and 5.3 for the week. It's hovering around 72.5. So, So then we had some CPI, some inflation data come out, and that shouldn't have been a surprise to anybody, right? Energy impacts everything.
Yep.
With the spike in oil prices, right? That's going to create inflation, kind of, right?
Yeah, pretty transient, though.
Exactly. Transient inflation versus persistent inflation.
Yeah.
And those are two very different things.
Yeah, because it's much less sticky when it's tied to the price of energy. And in this case, like, as we've seen, pretty volatile movement. So moved up quick, but it's also dropping quick.
Yeah. Yeah. And so, which one of them's up, what, 3.3?
So, yeah, the CPI print was 3.3, which is considerably higher than last month. Last month was 2.4.
Yeah.
That's because we saw
Almost
such
a
a
whole
climb
point jump. Yes,
on
from
oil.
Correct.
But then that's why, in this case, that's more noise. You look at core CPI, which excludes food and energy. So the whole oil thing is taken out of the equation. It came in at 2.6. And so that's only up. Last month it was 2.5. Now it's 2.6.
Yeah, 1/10 of a point.
So I think that is a better number to be looking at. Take away some of that noise.
Yeah.
Yeah.
Yeah, absolutely. So I don't think the inflation report's a big deal. The stock market doesn't appear to think so either.
Yeah, it didn't flinch.
Yeah. If this ceasefire thing can hold and get worked out and open the Strait back up again, obviously I think you're going to just see everything go back to normal.
Yeah, CPI would trend right back down to where it's been.
Yeah.
Equities probably do well with it and probably be back at all-time highs.
That's right. So, anything else?
I think it's everything I had.
Yep, same here. So until next week, this is Elliot.
Nathaniel.
Signing off. See you guys.